Welcome to Market Pulse, your trusted source for insightful market analysis. Today, we're taking a deep dive into Tesla Inc., ticker symbol TSLA. Tesla has been in the spotlight this week with a series of events that have left investors debating whether now is the right time to buy or sell. Let's break it all down for you. This week began on a challenging note for Tesla stock. On Monday, TSLA experienced a notable 4% decline, closing at $338.59. The drop followed news about potential changes to California's electric vehicle tax credits. California Governor Gavin Newsom proposed state rebates aimed at supporting smaller electric vehicle manufacturers, potentially excluding Tesla from these incentives. This exclusion could weaken Tesla's competitive edge in a state that represents a significant chunk of its market, adding to the uncertainty. UBS analyst Joseph Spak weighed in with a less than optimistic view of Tesla's current valuation. According to Spak, Tesla's recent post-election rally is more a result of market speculation than any substantial improvement in the company's fundamentals. UBS maintained a sell rating on the stock, signaling caution to investors. Let's also address a broader concern: tariffs. President-elect Donald Trump announced a 25% tariff on imports from Canada and Mexico, while Tesla has been working on reducing its reliance on imported components. This policy could still impact its supply chain and pricing strategies. Higher costs may put additional pressure on Tesla's profit margins, potentially translating into higher prices for consumers. Despite these hurdles, Tesla's stock has shown resilience. Since the November 5th presidential election, TSLA has surged by roughly 32%. This impressive rally has been attributed to optimism around Elon Musk's potential influence with the incoming administration. Investors are betting that a Musk-Trump alliance could pave the way for regulatory changes favorable to Tesla, particularly in areas like autonomous driving and renewable energy. Speaking of self-driving technology, there's been buzz about regulatory shifts that could benefit Tesla. The Trump administration has expressed interest in easing restrictions on autonomous vehicle testing and deployment. Tesla, a leader in self-driving tech with its full self-driving software, stands to gain significantly if these policies come to fruition. However, not all analysts are convinced that Tesla's current momentum is sustainable. Some argue that the rally is driven by what's often referred to as animal spirits, irrational enthusiasm that isn't backed by solid fundamentals. This has raised concerns about whether Tesla's stock price is due for a correction in the near term. Let's not forget Tesla's production goals. The company is pushing to exceed its previous annual delivery figures. But with ongoing supply chain disruptions and competition heating up, this is no small feat. Rivals like Rivian, Lucid Motors, and traditional automakers like Ford and General Motors are intensifying their presence in the EV market, offering competitive models that could capture some of Tesla's market share. On the international front, Tesla's expansion in markets like China and Europe continues to be a key growth driver. In China, Tesla has been ramping up production at its Gigafactory in Shanghai, while in Europe, the upcoming Gigafactory Berlin is expected to enhance the company's ability to meet demand. However, geopolitical tensions and evolving trade policies could pose risks to Tesla's global ambitions. So, should you buy Tesla stock right now? Let's break it down into pros and cons. First, the pros. Tesla is a market leader in electric vehicles and renewable energy, with a brand that has become synonymous with innovation. Its advancements in self-driving technology and its ability to scale production set it apart from competitors. Furthermore, any favorable regulatory changes in the U.S. could act as a catalyst for further growth. Now, the cons. Tesla's valuation remains a contentious topic. Some analysts argue that it's significantly overvalued, with its price-to-earnings ratio far exceeding industry norms. Add to that the potential impact of tariffs, exclusion from new EV credits in California, and heightened competition, And you've got a mix of risks that could affect future performance. The big takeaway here is that Tesla isn't just a stock, it's a story. It's a story of innovation, ambition, and resilience. But it's also a story of volatility and risk. For investors, the question isn't just about whether Tesla will succeed in the long term, but whether the current price reflects the risks and opportunities adequately. If you're considering buying Tesla stock, here's some advice. Do your homework. Keep a close eye on upcoming earnings reports, monitor policy developments, and stay informed about the competitive landscape. For long-term investors who believe in Tesla's mission and are willing to ride out short-term volatility, it could be a worthwhile addition to your portfolio. But for those with a lower risk tolerance, it may be wise to wait for a better entry point. As always, remember that investing carries risks, and it's important to consult with a financial advisor to ensure your investment strategy aligns with your goals and risk tolerance. Thanks for tuning in to Market Pulse. Don't forget to like, subscribe, and hit the notification bell for more deep dives into the market's biggest stories. Until next time, stay informed and stay ahead.